course, I was thinking Mr. Chandra has got 4 questions. I think Mr. Kejriwal has got almost 10 points. I'm happy that someone is spending time on us. So that's very good. So coming to Mr. Chandra's question first. So Vinesh Chandra. So I think that's a very valid point to begin with. What are the key drivers of growth? So last year growth, of course, it was very clear that the growth is coming from all corners. No doubt the growth in the API was a bit muted, around 4%, but medical devices grew on around 12% and formulation grew around 15%. So all three sectors were growing. So the interesting question is the growth sustainable? I think that's a valid point. That API growth, nominal growth, of course, 4-5% growth is not a big deal, so we will always be able to sustain. But obviously, we are looking for more growth for API, which we are not seeing immediately. So because of the disturbed Q4, rather Q3 onward, since the time the US was disturbed, and of course, there was something happening in Europe, Q4, then Q3, Q4, even Q1. Q1 was almost washed out. Now, again, because of this whole tariff story, the whole world is a bit disturbed on exports particularly. So we are thinking that probably we may not grow API at that speed, but finished dosage market is growing, domestic market is growing, device is growing because that major business is in India only. So we are happy and the growth drivers are all sustainable. And then I think the next question, which is more of a wish that, okay, dividend has come up and we foresee dividend will be able to increase and continue. We all pray for that. And I always say that, like you, I am also a shareholder. So we all wish we are working together for this whole big thing. And we'll keep on paying the dividend, and how much would again depend on the cash flows. And we'll come back to you next year what kind of dividend we offer. So next, I think, is on the QIP program and expansion. So as I broadly explained, there were two areas of QIP. One was the API, and second was the medical devices. And of course, third, of course, was small working capital part. Working capital is going in routine and has been spent. On the API part, around 70% of the money has been spent and the capacities are being created. Some building work is over, some machineries have come. By end of this year, all the API part will be over. Medical devices, there is one project still a bit slow because of the global scenario. But by end of the year, all the projects will be completed. We had planned for 18 months, but it may not be 18 months. By within 15 months, we may be able to do that. So, but it's on track. And the last question is an interesting question. Do we need more funds? I would say we all need more funds, but we do not have any immediate public plan to raise any capital because not because that we don't have to grow, we don't want to grow, but I think we should wait for the global scenarios to settle, things to settle. But in the meantime, companies working on new projects, new R&D initiatives, and a lot of activities are happening. So as you would see when I reply Mr. Kejriwal's questions, a lot happening around various things, and at whatever level fundraising is required, so we will come back. So I hope I have answered all the questions of Mr. Chandra. Thank you, Mr. Chandra, for spending time on preparing for us. And then I can reply to Mr. Praveen. I think most of the points were on retail investors, and of course, most of the points were hinted again at Mr. Kejriwal. So thank you, Praveenji. So now I come to Mr. Kejriwal. So which is, he said that's the fifth meeting, but I would say he had been attending all AGMs, online, offline. So he's one of the oldest shareholders in the company. So that's a very good welcome, Mr. Kejriwal. So here I think the major point, first point he has raised, other than the facts, is that why is the June quarter profitability down? As I shared with you that there are two major things. One, of course, is the global factors wherein export orders are a bit delayed. I won't say that they are not there. Export orders are delayed because earlier people were keeping regular inventories, regular pricing, and of course, regular scheduling and dispatches were there. Now, because of the disturbance, because of the price fluctuations from China, because of the global uncertainty, nobody is keeping stocks. So everybody is in a wait and watch. So more of business has come on a spot basis than on a long-term basis. In general, for example, if some company places order 2 months in advance, 3 months in advance, now nobody is doing advance ordering. So that's why there is a slowdown. So it may be temporary, but we have to wait for the right thing. But ultimately, So long as human beings will remain, medicines will remain, demand will remain. So there's no dearth of demand, but sometimes one product shift to another product, sometimes there's a temporary blip, but overall there's nothing wrong, and these are temporary issues, and when the market improves, we are able to recover much faster. So second interesting point is GST reduction where there would be a benefit. I would say absolutely all companies would get benefit, and more importantly is our customers would get benefit, patients will get benefit, doctors will get benefit, insurance companies will get benefit. So it's an overall, as I shared earlier, that it's not a tax reform, it's a healthcare reform, it's a healthcare gift. And the government has shown very clearly the intention that we should tax the luxury, not the lifeline. So now life cannot be taxed. You cannot be taxed to live. So that's, I think, an interesting thing. So then coming about the various restructuring which are happening. So that I would say in a broader sense, I'm not talking very specific. So Mr. Kejriwal, what's happening is that we are a pharma company, and as a pharma company, 40 years ago, we started as an API company, bulk drugs company. So as we go forward, and of course, at some stage, at some level of management and some level of top line and team, so you can manage the house within a given system. But now the size of the company is growing. We need better skills, better management. So API has become a core focus and remains a core focus. So whatever does not fall into that API and R&D, API, the core story is R&D. R&D, and of course, you need a good business development team. That's it. But business development team also cannot do much. Primarily, things is of R&D. So we want to focus on Morepen as a parent company to focus on R&D and remains core API company. And that is what is our investors are looking from us. That is what our stakeholders are looking for us. That okay, what does Morepen do? Morepen cannot be doing API and formulation and RX and OTC and medical devices. So because investors in the market, 40 years ago, market was different. Now after 40 years, markets have changed. Investors are specialized. Someone who is investing in API, he is not investing in devices. Someone who is investing in consumer goods, he is not interested to listen to, for example, medical devices. Or more people are interested in medical devices than, for example, say R&D. So these are different set of investors. So we are restructuring and realigning the whole company within the given framework so that we are more approachable to institutional investors. And as you would see, our institutional holding is very minimal. It's only decimals, 1 or 2%. So we are looking for to prepare the company for the next phase, and I usually call it Morepen 2.0. As Morepen 2.0, we want to be very focused, dedicated, clean, and clear picture that this is what it is. So temporarily, we'll feel some gaps here and there, and specifically touching, for example, RX business. We separated RX business because that's a sales focus, and you would already see that the moment we made it a separate company, we immediately started announcing its growth plan. That now as Morepen RX, we are increasing the manpower, we are taking it to the next level. Because when RX business is sitting in the parent company, so it doesn't have a focus, it doesn't have a clarity, it doesn't have its own targets. You are sitting under the tree with an umbrella. So, but if you already have an umbrella, we would say go and walk. So, and taking a lighter example, केजरीवाल जी जब बच्चा थोड़ा बड़ा हो जाता है उसको बोला जाता है भाई इंडिपेंडेंट चलो जाओ अपना जिंदगी ढूंढो. So we cannot remain under shelter every time. So that's what is happening with RX. So on the medical devices, we had already planned that, okay, we'll shift the medical device business to a separate company. So here we had already considered the demerger process. And most of you would know that demerger process is a court process. So looking at the priorities of the company and looking at the overall picture that we are a 40-year-old company and medical devices market is hot. So we thought that, okay, we should try to do a process wherein medical devices business can be hived off into a separate business without affecting the tax structure to the company and of course ultimately to the stakeholders, to all the shareholders, so that we can always produce a value for both parties, for the company also and for the shareholder also. But here the issue is that we are trying to avoid the court process. But if we avoid the court process, then it's easy that it's an internal arrangement and we shift it. As far as the number is concerned, so the number is typically, it's just a number derived from a balance sheet. So that to avoid tax, so that we don't have to pay tax just because we shifted from one company to another. Whenever that company creates some value, but now under the present structure, So we have also been able to rearrange the promoter holding in a way that as promoter company, because it's a valuable asset, we have to have a certain percentage of the stake. We cannot expect that, okay, company to be at 30% holding by the promoter, 40% holding by the promoters. So our investors have been consistently asking us to raise your share. So we have been advised to in a certain pattern so that before we go to the market, promoter shareholding should be at a certain comfort level so that investors get a comfort. And a broad thing. Similarly, on the Dr. Morepen brand or a Dr. Morepen subsidiary, here again, Mr. Kejriwal, so as a company as a whole, like you said that, like I shared earlier, that I am an API company, and then I'm a medical devices company. So as an API company, a medical API company prioritizes R&D. Medical devices, again, either it's an R&D priority or naturally it's a more of a diagnosis and customer focus. But OTC business is absolutely different. It's consumer focus. So OTC business needs more consumer attention. It is more going toward FMCG. And these days with online things coming up, with Instagram coming up, with different type of shopping coming up, so that's a different cup of tea. So there again, we were looking to buy out certain things. And of course, the market cap was of the value of the company was small. So it was a, I would say, bitter pill to swallow, but we decided to do it in such a way that, okay, the long-term value creation of this company will be much higher. Dr. Morepen is a company in last 25 years, it has not been able to create any value. We have been investing, and it still needs more investments. So if we are not as a company, we are not ready to invest, then sometime we have to take a call, okay, we are not investing. We get a partner who is ready to invest, maybe bring in equity or bring in market capital, whatever way. So these are broad things, but within lines to lines, I think there are a lot of things which we work before giving any news to the market. And finally, I welcome you to this point that wherein you said the share price will be 500 rupees. I think let's all work towards that and make this company thrive. And particularly today, when we are meeting on such a very spiritual and divine day, all your words are important and all your blessings are required. So I think with all that, I think my questions are answered.
Any other yes, pending? We have answered everything.
With this now, I would like to thank all the members for asking questions and sharing their thoughts through video conferencing board. Since the requisite forum is present, I call the meeting to order. Can we go ahead?
Yeah, yes, sir, we can.
Good. Dear members, the notice of the AGM along with the annual report comprising of financial statements, auditor reports, director reports, and annexures have been circulated on 12th August 2025 through email, and physical copies have been sent to those members who have requested for the same. The annual report has also been placed on the website of the company, stock exchanges, and NSDL for easy access. Please note that statutory auditors, secretarial auditors of the company have expressed unqualified opinion in the audit report for the financial year 2025. Therefore, with your permission, members, I take the said reports along with the notice as read. And coming to the business, dear shareholders, it's with immense pride and deep sense of gratitude that I'm before you today to present the company's annual performance. But before we go to the annual performance, I must compliment that, okay, today we are meeting on a very important and very auspicious day. I'm sure that the whole town is bang with Ganpati Bappa Moria. And today, as we say goodbye to Ganpati for the blessings, and we all wait for all the blessing whole of the year from him. So today, on this auspicious day, before we get into the business, we have two important things to share with you, which is, again, I would say more of blessings. So the first thing is that your company, with your permission today, we are putting to vote that company is declaring dividend after almost a gap of 23 years. So it was in financial year 2002-2003, we had declared dividend. So now we are back to you for approval of the dividend. Of course, it is 20 paisa per share at a face value of 2 rupees. It's almost 10% dividend. It's a small beginning, small start. But there was a long pending demand from the shareholders and of course from all the quarters. So the company is improving. We are coming out of the red and the cash flows are better. So we are declaring a dividend. So that's the first news. And second news, which you all might have read in the newspaper by now, I think the major news what we all have noticed is the next generation reforms of the tax, the GST. GST was implemented almost 8 years ago, and we were all approaching various forums of the government to the right corridors. That okay, there are some inverted structures, and why the drugs have to be taxed, why the life has to be taxed, because the fundamental right is that health, particularly, I would say, and I'm not talking about other sectors presently. Health is a sector that you cannot pay for health. Health is not a privilege. Health is your right. So we cannot be taxed for living. So they always say that you should tax the luxury and not tax the lifeline. So I think it's a big thing now today, and these reforms which have come day before yesterday. So these reforms are not just notional reforms or rationalization of structures or simplification. These are landmark reforms, and I would say these are historical. And this has set the pace for the coming years or the coming decades, that how government is looking for to make India a healthy nation. So, because the moment we say we are paying tax on everything, you're paying tax on insurance, you're paying tax on your credit card, you're paying tax on almost everything. But for God's sake, health should not be taxed. And particularly for the patients who are suffering with life-threatening diseases like cancer. So government has removed all the GST on that. There is 0% tax on that for any companies who are into that trade. And so they would certainly have to pass on. And I think it's a good boom for the industry and for the patients, most importantly. Second, I think, is that the government has removed one slab at all. Most of the medicines were 12%, and some medical devices and even some drugs were 18%. So now government has removed the 12% slab. All the medicines are at 5% slab. So that's a good news for the industry, good news for the patients. So temporarily there may be some logistics issues, but as friends, you would understand that within a month or so you'll come back. Even when GST was implemented, there was a lot of hue and cry, but finally it is a successful thing. So what we see now is that with a 5% tax, the medicines are going to be cheaper, 5 to 7%. But more importantly, what I see is that, like I already said, that health is not a privilege, health is not a luxury, it's a right. And many a time, the poor guy who doesn't have a shelter on his head, or maybe he's sleeping on the roadside, or he's just barely covering his household expenses, he cannot pay for the medicines. So now at least he can pay for the medicines, he can take good care of his health. And that way, I would say these reforms are not only the tax reforms. These reforms are like healthcare reforms. Government has given health to everybody, and going with the visions of Modi ji's, who want to make a healthy India. And of course, there has been an Ayushman Bharat scheme, there have been Jan Aushadhi, and there have been consistent efforts of the government that more and more people should have access to health. I think we are right there, and we are meeting at the right time. And I think going specifically to details, medical devices is another thing. Wherein glucometer, BP monitor, where we are market leaders at both places, that has been reduced from 12% to 5%. And small little thing, thermometer was at 18%. It's a laughing point that thermometer was considered luxury. So now at least it is at 5%. So you can afford to buy a thermometer on the lighter side, I'm saying. So, but the whole point is that we can see that government positive attitude toward pharma industry and healthcare as a general, as a whole, is important. And I have a strong belief that once you have a better compliance, once you have a better testing, whether it is glucometers, BP monitors, thermometers, once you have better compliance, better testing, so the health of the people will start improving in general. Cost of the medicine is further going down, hospitalization will reduce, and more importantly, once hospitalization reduces, insurance also will become full. So we are looking for a healthy India. And with increasing stress, with increasing, I would say, problems coming in life, we need to save some money for future also, and keep investing. So wishing all of you again happy, healthy blessings from Ganpati today. So I think we should switch to business now. Can you switch on the presentation, please? Yes. So friend, this year we are showing you the presentation live here. So I think it's skipping too fast. Yeah. I think the presentation is skipping on its own. Yes, can you see the presentation? I'm sure everybody can see. Yes. So dear friends, so we have two type of business, and as you already know that we are primarily into the pharma business, where 73% of the business come from pharmaceutical, wherein we have medicines, APIs. API is the bulk drugs, wherein we manufacture the basic source, then we make the formulation, tablets, capsules, syrups. That we loosely and consolidatedly called a pharma as formulations. So that business is around 73% of the company, and another 27% is medical devices. This is the last year numbers. Quarter on quarter, this thing keep varying. Sometimes medical devices become higher, some become it goes 27%, 28%, 29%, sometimes 30%. But over a longer period of time, medical devices is growing, and pharma business, of course, the focus is to have more of medical device growth because the growth in medical devices is higher. Pharma business has been growing at a CAGR of between 15 to 18%. Medical device business has been growing at a CAGR between 25 to 30%. So we have a good case here. So these are the two out of 1,830 crores, 27% is medical device. Now coming specifically to the company's positioning, most of it you know, but for the new shareholders who have joined for the first time today, we are a 40-year-old company, and of course this is a 40th annual general meeting of the company, and we are market leaders for 6 APIs, which we are global leaders. We are exporting to 80 plus countries. 72% of the business of the company is exports. Exports mean hardcore, good currency export, dollar exports, and major currencies. We are market leaders for BP monitors and glucose monitors. And of course, we have a fully integrated backward integration for both pharmaceuticals also and for medical devices also. Our focus is on increasing the formulation business, which are a field force in the market. And of course, we have a strong portfolio of the consumer drugs. That's broadly the positioning of the company. And if we look at the overall picture of the consolidated revenue of the company has increased 7.5%, 7.4% last year, from 1,700 crores to 1,830 crores. And of course, during the last quarter, it had increased almost 10%. So this is on a consolidated basis, but we'll discuss more when we come to the individual businesses. Coming specifically to the pharma business, which remains our core. So here again, we have a friend, interestingly, a split of 73 and 27. 73% of the pharma business is coming from API, which is our core, which we started back in 1984. And we have some 40 odd drugs here. And that's 73% business. 23% business here comes from the formulation, wherein we make tablet capsules, we manufacture, we visit the doctor. So that's the formulation business. That's 1,334 crores is the total business. So this business, pharma business per se has grown by 5.8%. And of course, during the last quarter, it grew 8.5% from 1,251 to 1,334 crores. So here we have, friends, 6 products where we are market leaders. There are 3 products where we are number 1 worldwide: loratadine, desloratadine. These are both antihistamine drugs, anti-allergic drugs. And there's another drug, respiratory anti-allergy, Montelukast. There also we are number 1. Here we got 70 to 80% market share, 67 to, I would say 67 to 81% market share in the global market for exports out of India. And there are 2 statins, which are cholesterol-reducing drugs, atorvastatin and rosuvastatin, where we are number 4. And there's another anti-allergy drug, fexofenadine, where we are number 3. So broadly speaking, these 6 drugs make around 88% of the pharmaceutical market of ours. And then we have new molecules, where we have range of diabetic products: sitagliptin, linagliptin, dapagliflozin, empagliflozin, saxagliptin, ertugliflozin. And there are cardiac drugs. I don't want to bore you with the names, but there are apixaban, edoxaban, rivaroxaban. We launched 2 new products last year: ticagrelor, bempedoic acid, and we launched a new revolutionary drug, resmetirom, last year. And then there are a couple of more drugs which are in the list. And of course, then there are a lot of drugs which are under development. You can see it in the screen, which are more of cancer and new age drugs: baricitinib, tafasitinib, bilastine, finerenone, rupatadine, caripiprazole. So these are the drugs which we are already at a pilot scale. but I don't want to bore you with the technical thing. Here, friends, interesting thing is that the new molecules, so revenue of the new molecules and the new products is increasing. As I shared that 6 products, we are market leaders. But the new product share is growing up from 8% in 22. It has gone to 12.3% last year, FY25, and there's a 4.2% increase. And when we talk of the product revenue also, the revenue also has gone up almost 60% or more in this last 3 years with the new molecules. Then, as I shared earlier, that we are primarily focused on exports on API, and we are intentionally reducing our share in the domestic market. So export share has gone up from 64 to 72%. So almost 7.5% increase in the exports in the last 3 years. So of course, it is a bit dicey issue that the global markets have been shaking. There have been a geopolitical situation. There have been wars, and I would say economic crisis in multiple parts of the country, in multiple parts of the world. But our exports have increased thanks to our team and dedicated efforts by the R&D team in supplying the new products. And in the value terms, also the export value has gone more than 20% in last 3 years. So coming specifically to the exports market, and of course we loosely say 80 countries. Normally it is 85 to 86 countries now. We have 500 customers which we are exporting, which to them worldwide. Here, friends, the interesting point is 60% of the business comes from repeat customers. So this is what our strength is. The last 25 years, we have been able to nurture so good a relationship with the customers that we do not have to, I would say, go back and forth to find a new customer every time. So 60% of the customers, there's a repeat business. And of course, we always enjoy good relationships with the team, with the customers, because thanks to a beautiful team and a very experienced team, what we have. And as you would say here in the graph side on the side, US market is only 15%. So it is 15% of the total exports what we have. So around 72%. So total US market are 150 crores out of 1800 crore. So our dependence on US is only 6 to 7%. So we are very, I would say, well diversified and very mature market in different segments. It is well segmented. So we are not dependent on US much. So this is the region-wise, I would say, US market, even though there have been fluctuations in the policies and everything, but we have not lost any market. We are almost same US market previous year and this year. Europe market has certainly gone up. And India market, as I shared earlier, we are intentionally reducing our focus because of the price parity. And APAC market, of course, has been growing. Other market, MENA and South America, they are almost flat. This is a country-wide position, and specifically to the overall revenue, API business has grown 3.5%. Quarterly, of course, it has grown 4%. Here, friends, interesting thing I want to share with you is that the business of the company has gone up 57% in terms of the volume. We have produced 57% more quantity as compared to FY23, from F23 to 25. But in price terms, the prices have come down almost 24%. So this is what I would say the last 2-3 year impact of the price fluctuation in China and global scenario. The prices are not increasing. The raw material prices have gone up, and sales prices are coming down. So there's a pressure on the margin, which we are working. And overall revenue has gone up by 6 to 7% in spite of everything. 19%, I think. So now coming to the capacities, as friends, you might be knowing that last year we had done a QIP for investment in the machineries and increasing the capacities. FY23, we had 300 kiloliters of capacity, then it was increased to 400 KL last year, and then now we are working on increasing more. Already 514 kiloliters on FY25 March. And of course, as we speak, more machines are being installed, and 600 KL capacity will be completed by end of the year, which will be almost double than what we were at FY23. So of course, this is our, I would say, effort which R&D have been doing day in, day out. We have 168 patents which we have filed internationally. 55 scientists are working day and night to deliver what our customers want. We have 325 drug master files all over the world, and 27 of them are in US and Europe. There are 48 new products which our R&D team have churned out. And of course, then there are 30 new products of the finished dosage which our team has developed. And of course, you all know that last couple of years, we have never got any bad report from FDA. We have nil 483, which is a FDA inspection report, nil observation from FDA from last three consecutive FDA reports, FDA inspections. And of course, as we speak, we are increasing our chemistry skills regularly. All our plants, API plants, are inspected and approved by all the global authorities. US FDA, which is from US, and from Europe, there's EDQM, then Japan PMDA, and Visa from Brazil, NMPCA from China, then Korea, of course, WHO, the GMP from India, and for medical devices, friends, we are approved by the ISO 13485. So all the plants are up to date and global standards. So as I shared earlier that we are increasing our focus on the finished dosage. So the revenue is also increasing. Finished dosage revenue has gone up 21% in last 3 years. We had till last year 200 medical representatives, and the idea is to take it to 400 by March 26. We are already at 340, 350 as we speak. And of course, there will be addition every year, and 1,000 people more would be added in the next 3 years' time. This is a ongoing process. We shared earlier through a press release also that this is the first time in India we have launched a product, resmetirom, which is a drug for the liver, fatty liver. This is usually called non-alcoholic fatty liver. So wherein people have fatty liver not because of alcohol but for some other technical reason. So we have got approval from drug authorities, CDSCO, Central Drug Authorities, and we are working on the bioequivalence studies. We have got a permission to conduct the bioequivalence studies. So we are working towards completing the process. These are our prime formulation brands, wherein we have some anti-infectives, Saltum, Cefepime, Claritin. Then on gastro range, we have got good product, Dom DT. Intibact is our probiotic, which is a proprietary drug. And Udofix we launched this March only, last 2-3 months ago, and it is growing fast. It will become a good size product within 2 years' time. Acifix, we launched a draft format. Then in the multivitamins, we got Rhythmix, Compact, Cumor. On the cardia side also, we launched a couple of new products, Ticapen, Pixamore, Empamore. So these are the drugs which are, I would say, customer favorite and doctor favorite these days. And now, friends, coming to medical devices. And this is a hot topic everywhere, including when we talk of this GST reforms about medicine, they have just mentioned general, but about medical devices, they are specifically said by name, glucometers and glucometer strips and thermometers. So it looks like government is looking positively at all these things. So here in medical devices, friends who do not know, so we are number one and market leader in case of glucometers. We are number one market leader for BP monitors. For last 25 years, we have been serving this industry. And last 10 years, we are doing our own manufacturing, friends. So we have 14 million, this is as on 31st March, 14 million users of glucometers in the country. We have installed these number of meters and people buy strips over it. We have fully integrated, fully backward integrated facilities. We have all India distribution. And of course, the facilities are approved by ISO. This is the best combination what we could have. Top ranging product, own manufacturing, own distribution, best facilities approved by ISO. And of course, we are looking for major growth in this sector. So these are the common products. I'm sure you can see it on the screen. Glucometer, BP monitor. Last year, we launched nebulizer, rather relaunched. Then we have thermometers and ortho supports. There are multiple range. You can see just 2 products here, neck support, back support, knee support, ankle supports. So then stethoscopes for the doctors and of course, some pregnancy kits. The revenue of the medical devices have been growing very good. Last year, it grew 12%. Last quarter, it grew 15%. And in terms of the number of meters installed, as you can see, last year, we sold 11.1 glucometers. Now this year, it is 14.2. And then it is number of strips from 36 crores to 41 crores. So annual revenue of glucometers is up 12%. So this is the overall picture of glucometers. We have 15.3 million glucometers in the market, which is like 1.53 crores. So here, friend, I would like to give you a little background that the total diabetes market of India is expected to be 10 crores, which is like 100 million. So out of 10 crores, 1.53 crore meters are ours, and I would say almost similar amount you can say from competition, or maybe around 4 million meters in the market. 4 crore meters in the market. So you can see out of 4 crore, we are at 1.53. It is around 35-40% market. But this market is only a fraction of the market as compared to the total diabetic population. Maybe I think the country needs 5 to 10 years more to reach to every single consumer. So most of the medicine is not, the customers are not addressable. So people do not have reach, and maybe the price is one factor, distribution and reach is another factor. But as a company, we are working hard to reach to more and more consumers. And as you would see it on the right-hand side, 2.1 billion glucose strips have been sold. This is the number of tests which our meters have already conducted. So many people have already been benefited by this. Then this is about BP monitor. This has grown 12%. Last quarter, it has gone 14%. I'm catching some speed looking at the time. So, of course, we are increasing capacity of glucometer strips, and BP monitors. And last year, we had some QIP money, which is being invested here also. And now looking at the major growth drivers for this market. So here, friends, the major point here is that medical devices market is growing because of multiple reasons. One, of course, is increasing health awareness. Thanks to internet, thanks to COVID, everybody is concerned about health. Everybody wants to check their health. Everybody wants to check the parameter. Parents are being under pressure from the kids to get get the regular testing done for BP or even for glucometers. Then, of course, there is a growing concern also. There's an awareness and there's a concern. Both things are there. And secondly, with the growing economy and support of the government, the disposable income is increasing. So more and more people are spending on health. And thanks to technology, more and more devices have come up, more and more digital devices have come up, better tests have come up. So that's where it is going to increase. Globally, this medical device is a big business, $234 billion, where India is expected to be 50 billion by 2030. So growing at CAGR of 12.7%. But India has got a large population base, and it is expected that the total diabetic population in 212 million, wherein, as we shared earlier, we are in decimals only. 62% of the market is untapped. So this is one issue, that these untapped market will slowly get tapped. So I see this 62% market as an opportunity. Here, as a part of the digital effort, we have launched an app wherein you can log in your reading, BP or glucose in the app, and you can scan it, read it, take a photo or text. So this will keep a record. It will give you graphs. It will give you alerts. This is just an effort toward digitalization. These are the few things which we have been doing for increasing our reach in the markets. We have our products present in Thailand, Qatar, Oman, under Dr. Morepen brand, wherein we have local distributors who are distributing the products under our brand name. Then we are working on other market, US, Kenya, Malaysia, wherein Kenya, Malaysia again will be through distributors, but US maybe with the big chains. So even though in the latest tariff war, which is played between big boys, so medicines are not covered, but still we are conscious of the fact that in case there are any tariffs, so we do not get affected much. So that's all about the overall business. Just to give you a quick review of the financial. So last year, the revenue grew 7.5% and EBITDA grew 11.5% from 10.3% to 10.5%. PAT, which is profit after tax, grew from 97 crores to 118 crores, around 22% increase in the PAT. So the PAT percentage from 5.9 to 6.5%. So overall, happy ending. And today we are at a situation that, okay, looking at these numbers, so we are proposing to you to approve the dividend so that we get something in the money, something in the pocket. These are our 4 manufacturing facilities. We have multi-integrated facility at Baddi, then at Masool Khana, which is our first plant where we started. Parvanu, we started in 96, so the formulation plant. There was another formulation plant. These are industrial area. There are small plots. but Baddi and Masool Khana are big. Baddi is like 60 acres of land parcel. And this is just a one shot of the Baddi's facility. It's an old picture. That's all from my side on the business. So overall, I would say the future is bright, and with your continued support, partnership, Morepen will not only grow but thrive. Thank you very much. Now, may I request the company secretary to give details about the voting process?
In accordance with the provisions of Companies Act 2013 and the listing regulations,